Welcome back. This is Mike with breakouts. It's May 20th and we're back, but not with a market update. I've got something I want to show you today, something I've cooked up over the weekend, which I find absolutely fascinating, very useful, and I think you're going to get a kick out of it. But before we get to that, let me show you Bitcoin real quick. Of course, it's obligatory. We're doing pretty well here, right? Look at this. I mean, it's holding steady, and I think the support line that I've pointed out several times now, it's been successfully retested thus far. There was one fake out on here, which it survived, bounced right back, and it's been holding strong, and now it's running a little bit into resistance right here. And it might be nibbling on this for a while. Hey, it might even drop back down, drive on crazy for another week or two. We'll see what happens. Summer's coming, who knows? But once it breaks above this, it's going to make a beeline higher. So it's looking pretty good, okay? But this is not what I wanted to show you. What I want to show you today is something much, much cooler. So let me pause real quick and pop up the right view on the screen, and then I'll explain you what I've been working on. Okay, I got it. So I've hacked up a script over the weekend because the weather was crappy. It's been raining a lot here in Spain. You wouldn't believe it, at least here in the mountains. And so I sat down and started working on an idea that I had for quite a while now. Let me give you a little bit of background. Basically, some of you know that I've been an avid options trader for a very long time. I even run a pertinent service. Members are very happy. Returns have been solid. I've done this for a very long time. I'm a good options trader, and I've done a whole series on options. And I've always been very spoiled with the type of data, metadata, market data, right, that I have access to in the stock market when it comes to options, implied volatility, all this kind of stuff, the Greeks. And it helped me immensely. It still helps me immensely to plan my trades, monitor my trades, and find candidates that I want to trade, all this good stuff. And of course, I'm super eager to apply this type of trading, this style of trading that's been very successful for me in the stock market to the crypto market. And it proves to be very difficult because when it comes to derivatives, options, futures, there isn't too much. There's Binance, there's Deribit, there's a few others, but it's very limited, and the offering is limited, and the amount of data you have access to is very limited. Like, just try to go out there and try to find implied volatility data on regular crypto coins with market caps in the millions. You can't find anything, and it's super frustrating because that style of trading has worked very well for me. It gives me so much insights into the market. And it's so hard to find this data. So I had to find a workaround because I just can't get my hands on, let's say, implied volatility data on, I don't know, WIF, right? Or ENI or whatever it is, right? BNB, whatever it might be. I cannot find data. And so I had to find a workaround. And what I settled on was basically an algo. It's based on standard deviation on price data. And I decided to use 30 days because that seemed to provide me with the type of insights that I need. And it seems to be spot on. So let me explain. It sounds probably a little bit academic to you, but I promise you it won't be. We're going to be hands-on. We're going to look at charts. It's going to be fun. And I think it's going to blow your mind because it's actually very cool. So this script, basically what it does is it spits out a spreadsheet. And it looks, well, it's not really a spreadsheet yet. It's a CSV file, comma, separated value file. Still working on this. And gives me all kinds of ranges, daily ranges, weekly ranges, all that based on historic price data. Last 30 days, that's what I've settled on, okay? I tried now 90 days, works as well, but I like 30 days better. Go figure. And once we look at charts, it's gonna make sense to you. So, okay, so it's the script. Unless you're a coder, doesn't mean much to you. So forget about it. So this is that's how it looks like when it's imported into the drive, into Google Drive and on a spreadsheet. And so I sort it a little bit, and then I look at these ranges. I look at weekly, but also look at daily. And daily seems to be very interesting. And let me show you why. Because there's something else I want to show you, which I think you're going to find fascinating. And that is my Coinbusters Crypto Club open interest tracker, which I've written a few months ago. And it is basically what it does. What it does is every hour it runs, and it looks at spikes in open interest. Outliers, actually, to the downside, 5 to the upside, 5 to the downside. Make sense? And for instance, at 8 a.m. UTC, I do this in UTC because you guys are all over the world, so you want to have it in one format that suits everyone. So calculate what the difference is to where you live, right? To me, it's 2 hours here in Spain. And for you might be, well, if it's for me 2 hours on the East Coast, it's going to be plus 4 hours, right? For me, it's minus 2 hours. For you, it's probably on the East Coast plus 4 hours. And if you're on the West Coast, it's going to be plus 8 hours. But let's say here's Unify, right? And there's BNX, and you see these spikes here. And that's quite interesting because what that means is that over the last hour, Unify has been really spiking, right? If you're looking at this cumulative curve here. So what the basically tells us, we want to keep an eye on this, right? And so let me move this away. And one thing I want to show you is one that kept popping up. Actually, let me bring this back. One that kept popping up over the last few hours was PYTH, right? Here's a little bit down, but it kept popping up. So here it's down again, but it also kept popping up on the upside, right? PYTH. Let me show you where is that. Again, down again, which was kind of interesting. But then I saw it spike on the upside. See that? Down and then up. Anyway, it kept popping up on my scanner, and I'm like, something's going on because I have this theory now. And again, I'm still working on this, right? Just for the record, that it doesn't necessarily have to be an up spike. When there's manipulations happening, it could be to the downside as well. When the market is being spiked in a particular cryptocurrency, because the algos are very, very complicated these days. So what I mean by that is, well, this could have had a huge spike before, right? And then, of course, when you put this into context from before, there's a large drop. Does it make sense? So we're looking at relative movement here. For instance, from here where it was falling down, now it's gone up quite a bit. So there's a lot going on. There's a lot of trading going on. So I want to look at this stuff, right? Okay. So that was at 8 a.m. UTC. We're going to look at the chart in a second, okay? And I hope that's going to make sense to you. I think it will, actually. It's not that complicated. And I think you're going to really, really like this. So let's look at PYTH. Let's look at the spot, USDT. Oh, yeah, we don't want daily. We want hourly. Yes, that's what we want. Okay, so here's the hourly. And we're with Binance, yes, good. Because it's the data we're looking at, so we probably want to go with Binance. So what we're going to do now, see the spreadsheet right here. I've imported the CSV file. You probably know how to do this. I don't have to explain this to you. And when I was working on this, I was even trying to produce charts myself here, you know. I can probably look at PYTH, yeah. And, you know, that's what came out. Is that helpful to you? No, not really, right? So I said, forget it. I'm just going to do it like this with a spreadsheet, because if I give you guys access to this stuff, it's got to be useful, okay? So let's look for that again, because it's scrolled around. Okay, so what we're going to do now, going to do this, right? This is the daily here. I've got daily vol up. This is basically the volatility range, and I got it up and down. We got the same for weekly, by the way. But let's just follow, just focus on the daily for now. Okay, so we just copy this, C, Command C, and this rolls over. I'm going to probably make this somehow accessible every hour. How? I don't know yet, but I'll figure it out. I usually do. Okay, and let's take this line here, delete it, and we're gonna draw a line, and it doesn't really matter where you put it, because what we're gonna do is double click, and then we're gonna go, normally this is open, so you go to coordinates, and then just paste it in, boom, okay? So that's actually the upper range, believe it or not. And then we're gonna go to here, copy, same thing, right? And I draw another line, doesn't matter where you draw it, just double click, boom, copy, paste. Now you've got the super precise range here. That's the daily range. And admittedly, I calculated this later in the day. Normally, it's supposed to be at that particular time, at midnight. I'm not sure if I'm going to do it daily or if I'm going to do it every hour. I'm not sure yet how I'm going to calculate it, but the values, I tried it at different times, and the values didn't change very much, actually. So that's kind of interesting. Okay, just FYI. That might be cryptic to you. But I find also interesting is that based on just 30 days of data, I'm getting nice touches here, and that I see that actually, by the way, on the weekly range as well, right? And I found that really fascinating. I'm not going to show this today, but since I'm still nibbling on everything, but the hourly I found very fascinating in the context of using the open interest tool, because, well, one, one alpha factor alone is really not a system, right? And if we want to take advantage of the open interest data, well, think about it. We need context, right? Because open interest in itself is not enough context, right? So if PYTH keeps popping up, see right here it's popping up. I wish I could search for it. I tried, it didn't work for some reason. Here, it's actually number 1. That was like at 12 UTC, right? But if I go back here, it kept popping up on the radar, I think even at 8. Where is it? 07, PYTH, it's down. And if I go scroll up a little bit, PYTH here, that's at 3 a.m. Okay, so what happened at 3 a.m.? Let's go back to the chart. I mean, you wouldn't be up at 3. Well, actually, you might be because you're on the East Coast. But look at that. See, we're really seeing the spikes here, and that's from a low. That's why I'm showing you this chart. This is a really good example. I didn't have to look very far for this, by the way, but just FYI, okay? So we have this nice, see that, how it actually retested this line here? I didn't align this based on the chart. See that? Touch, touch. I find it fascinating, but that's just me. So here you start seeing activity in PYTH. When would I get into this trade? Well, probably down here or up here when it breaches here, because when it starts exiting in a range, and that's usually how I trade on the options side, right? When I have my, let's say, weekly expected range, I do trade on more longer term data with the options, obviously, right? Otherwise, it's just going to drive you crazy. But for your altcoin degenerates, right? If you're looking for a breakout, these 2 data points are extremely useful because you're seeing that's really picking up. What time is that? That's at 8. Okay, let's go back to our trusted tool. Rocket Chat is just like this client that I'm running. You get it on mobile phone and you have the channels you subscribe to, and now you can take a look, right? Here we go. That's 7. 7, it popped up. That was a little bit of a drop from before, and very interesting. At 8, I don't see it. That's interesting. Is it there at 9? Yeah. At 9, it pops up again. Interestingly, again to the downside. Again, a drop from before, but it keeps popping up and it breaches here. So this is really interesting. And again, why does it actually produce a drop here? Well, it comes from a higher data point before. That's why. At 9, again, a little bit of a drop. And then there's all of a sudden a spike, and that's at 10. See that here? This is 10, 9, 10. Another spike. So we're seeing PYTH keep popping up on the radar here. And by the way, just for the record, this is going through hundreds of them. And this keeps popping up, PYTH, like every other hour or so. And basically, the idea is here to look at outliers, let's call it just the outliers, on open interest, right? Plus minus, by the way, which is a bit surprising, but that's how it seems to be working. And look for breakouts in our range, in the daily range here. Because that is, I mean, you catch it here, it's still good. If you catch it down here, it's still good, especially after you look at the chart and you see this is a nice touch, right? I mean, if you want to put a stop down here, it's perfect. So this is a great way to structure your trade and you have context, right? You know that there's something going on, right? If you keep scrolling here, it keeps popping up. See here again, another 5. That's at 11. It popped up again. There's more and more open interest, right? There's activity. And open interest, look, open interest is just how many contracts are being held, right? Which are active right now in the market. So people are selling and buying. So the drop doesn't necessarily mean that's a bad thing. Maybe people are taking profits. Other people are buying. You know what I mean? So you have, here it is again. So PYTH kept popping up among all these, right? If you're looking at this here, how many do we have? Well, we actually know. Look at that. How many do we have? We have, after I do some, I actually remove a lot that don't have enough market cap, and I come down to 261 coins, right? From 261 coins, PYTH kept popping up, and it produced a spike today. I think this is really awesome, extremely valuable in my mind. And again, as I said, here and here are good breakout trades, right? Once it starts breaching here, you can structure your trade very easily. If you're taking a trade here, you can put your stop down below here, because that's basically your daily range. If you just want to get a quick scalp, like a day or 2 or 3 days potentially, but you would have caught this one this way. And I basically just start looking at this, and these things pop out so strongly. I find it fascinating. I'm going to keep monitoring it, going to keep showing it to you guys. I hope you found this interesting. If you like this video, please press the thumbs up button and maybe subscribe to our channel. See you next time.